Good afternoon. I'm Brent Wilsey, and welcome to today's Smart Investing Briefing.
And I'm Chase Wilsey, and gotta say, big shocker yesterday.
Major shocker, yeah.
And also in the market, big surprise. I mean, we've been thinking if Trump got elected, there's going to be a big pullback in the market. We saw the reverse of that today. A lot of
But it was
companies.
last night. We were so excited last night watching the Dow futures being down as much as 850 points, and we're saying this is great. Can't wait till tomorrow. We're going to sell up our hedge, do some buying. This morning, the futures are down 200 points. Market opens, and now it's been as high as I think 150 points. So I don't think it's over yet, though. I mean, this is only the first day. I think everybody's kind of in shock, like, hey, this won't be so bad. But I think maybe in the next couple of days, we could see that downturn. So as always, when it comes to investing, be patient.
Yeah, and I was going to say, too, again, I don't know how anyone that does investing can have a big ego. Because, I mean, no one predicted this. And this is why I'm going to bring back our quote that we said the other day. It's better to be partially right than completely wrong.
Right.
Because even though we thought Trump was going to win, I was about 50-50 on that,
right.
We thought the market was going to go down. Well, guess what? The market went up. So
And
you never know.
Yeah, and can we talk about, again, like Brexit, how wrong the polls were again? We kept saying that these polls are not accurate, they're very biased, and they were so far off, except for one that I think we talked about it, the artificial intelligence poll that was done based on social media, what people are actually saying.
Yeah, so maybe there's a new type of polling that needs to take place. We talked about this in an older post about this is kind of the old way of polling. They need to look at a new way to poll people because technology is changing, lifestyles are changing, and obviously the polls are 0 for 2 this year on big events.
Right. So let's talk about this is what it is. Trump and Pence are now the president and the vice president-elect, I guess what they're called, till January till they go in office. But let's talk about what you should be doing investment-wise going forward for the next 4 years. A couple of things we looked at, actually a few things we looked at, many things we looked at for you. Drug stocks have a good potential. The reason being that we're looking at is that drug stocks, there was concern if Hillary got elected, she was going to go after their profits and their drugs and so forth. Well, that's not going to happen now.
Oh, exactly. And, you still got to be careful. There are a lot of drug stocks that are overpriced.
Yeah.
Doesn't mean just go out there and buy all the drug stocks. And especially after today, there's been a huge increase in a lot of these drug stocks. Be patient. Look for some good drug stocks. Don't get sucked into the hype and find those good quality companies that are going to do well 3, 4, 5 years down the road.
Yep. As always, do your research. Another benefit industry is going to be the banking sector because we don't expect any new regulations. What we're concerned about with Hillary being elected, she's going to start breaking up the banks and all these regulations. Well, that's not going to happen.
No, not at all. And big concern with her was Elizabeth Warren, who wanted to crack down, was going to be like a head person. And guess what? That's not going to happen anymore. So these banks should do very well going forward. Like a lot of banks, too, because they are actually undervalued compared to a lot of these drug companies that are overvalued. So I think there's a double whammy here for the bank stocks as they're undervalued and they're going to be less regulated going forward under the Trump presidency versus the Clinton presidency. There are some areas that you have to stay away from,
Well,
though.
wait, I don't change it because I'm going to say on the banks, it is a much better area to go into. You can better define values as you're talking about versus the drugs. So I like that. Yeah, but as you're saying, well, I'll let you go ahead and finish.
There's some areas you got to stay away from, including solar and wind and these alternative types of energy, because Trump isn't a believer in global warming and such, so he's not going to subsidize these companies anymore, which is going to hurt their profits down the road.
And again, you want to be careful, too, of companies like, again, we'll talk about Tesla because they're making that big play on, Solar City. That may drag them down even more. So understand to stay away from these type of companies here. And then lastly, we've talked about this before, going forward, there's going to be problems with rising interest rates, and there's going to be areas that are going to be hit by that quite hard.
Oh, absolutely. I mean, just today alone, we saw the 10-year Treasury. I think last time I checked, it was about 2.06%.
Wow, up about 2. Not been there for a long time.
No, not there for a long time. And I remember when it was, I think, at 150 earlier this year, it was super low. So we've seen a huge appreciation in that. So you might want to check your bonds and see how they're doing. And this may just be the beginning. REITs are another area that you should be avoiding because they also have that negative correlation with interest rates.
And we checked the REIT that we sold a couple months ago. I think that's down 10 to 20% from when we sold it. And I think there's a lot more downside to come on that. And REITs are real estate investment trusts because they're interest rate sensitive because a lot of debt on the balance sheet.
Yeah, both of these type of investments have had a long bull market over the past and have done extremely well. I don't know about that in the future.
Right. Well, and you're supposed to buy low and sell high. think about these being on the high side right now. So, all right, let's give you a company for the day. We're going to talk about Lockheed Martin because it's another area that we think could do well with Trump and Pence in office because it's defense. Defense is another good area. So,
Exactly.
look at this chart here. I mean, it's done very well since 2012. Gosh, it was below 90 here. Now above 254. I'm kind of thinking overpriced. Well, and again, you got to be careful of this because we say defense looks good. Don't just jump into it because the fact that you could be overpaying for it. They've done pretty well. I mean, sales up 4.7%, earnings 12%. Those are pretty good numbers. You like those, right?
Oh, those are good, yeah.
But PE ratio, and this is the current PE ratio, 19.6, the average 16.8. Price of sales 1.5 over the average 1.3. So again, this one so far looking kind of pricey.
And looking at the balance sheet, current ratio 1.19 looks okay. Debt to equity though, 615.8%. I know they have a lot of investments they have to make, but this number still does scare me, especially coupled with a price to tangible book value that's not material. Now, why is price to tangible book value not material? They go out and acquire a lot of companies. Current goodwill on the balance sheet is $10.8 billion. Wow. Now, as a reminder, goodwill is what a company pays over the book value for the company they're acquiring. So that's a major concern.
Yeah, and I think also, too, you said that their debt doubled over the last year or so. It went up a lot, and the equity went down a little bit, I think.
Yeah, that's not a good thing. Debt going up, equity going down. Don't like to see that.
Right, right. And then lastly, going forward, the earnings per share, $12.85. Target price $2.12. Not what we expected, is it?
Not what we expected. So just because it may look like a good industry to go into, because now we have a Trump-Pence electoral ticket and a Republican, Congress and everything, be very careful not to overpay for the earnings of a company.
So I think we're in a very exciting period going forward here. We got a new administration next 4 years, so a lot of things changing. Investment-wise, you've got to be in to play the game. You've got to look forward. I think there's going to be some great things in the next 4 years, but you've got to know what you're doing. Thank you for joining us today for our Smart Investing Briefing.
Did you miss today's video live? Tap on the follow button down below to follow us to get notified for future videos.